U100 versus NDQ. U100 is the Global X US 100 ETF, and it gives you exposure to the 100 largest innovative companies across the NASDAQ and the New York Stock Exchange. NDQ is the Betashares NASDAQ-100 ETF, and it invests in the 100 largest non-financial companies in the NASDAQ. So which ETF made the most amount of money in the past? U100 has a better 1-year return, and NDQ had the better 3-year, 5-year, and 10-year returns by default. So we're going to have to look deeper into the metrics because U100 is quite a new ETF. So which ETF is older? It's going to be NDQ. It was made back in 2015, so we have 10 years of performance to look at, which is great. And U100 was made a little over 2 years ago. Which ETF is more popular? NDQ has over $7.7 billion in assets under management. Which ETF has lower fees? U100 is the cheaper ETF to own with a 0.18% management fee. Which ETF trades more often? NDQ trades over 200,000 shares each day, so you're going to get the price you want with this ETF. Which ETF is less volatile? We don't really know quite too much yet because U100 hasn't hit the 5-year mark, but NDQ has a 1.12 beta, which is a little above the average. Which ETF has more holdings? Both of these ETFs own 100 companies. Basically, the only difference between these two is NDQ only invests in the NASDAQ. What are the top 5 holdings and weightings? So both of these ETFs own the same amount of Nvidia. U100 owns a little more on Apple, Microsoft, and Amazon. And NDQ holds a little more Broadcom. Which ETF has more diversification? Both of these ETFs are tech heavy, but U100 has over 67% in technology. It also has more communication at 19.3%. And the only other sector this ETF really holds is discretionary. NDQ has more in discretionary, consumer staples, and healthcare. So you're going to get more diversification with this ETF. Which ETF has the best value? So NDQ has a lower PE ratio, PB, and price to sales. And U100 has a slightly better price to cash flow at 19.39. Which ETF has the best growth? With the growth metrics, we have an even split, with U100 having better historical earnings growth and cash flow growth, and NDQ has better sales growth and book value growth. You could say, looking at these numbers, U100 does have slightly better growth metrics. Which ETF has the best risk-adjusted return? So unfortunately, we haven't even hit 3 years yet, so we only have NDQ Sharpe ratios. And anything over 1 is great. So if I absolutely had to pick one of these investments right now, it would be NDQ. It has better investment liquidity, better value metrics, and better Sharpe ratios that we can see. But is there something better than these two? Building a 100% stock portfolio, you can see 28.5% is going in IVV and 19.7% is going in FANG. Basically, these two ETFs combined make up similar diversification to U100 and NDQ. So to test out this comparison, we're going to use 40% FANG and 60% IVV. Just like the app. Putting $100,000 into U100, NDQ, and a 60-40 IVV FANG split, we can see U100 made $65,000 in this time, NDQ made $64,000 in this time, and the InvestOz combination made $70,000. All of these portfolios beat the S&P 500, but you can see just tweaking it a little bit with FANG, you made quite a bit more money. Taking a closer look at the metrics, the InvestOz combination had a better compound annual growth rate and better standard deviation. This is only going to show a better Sharpe ratio than the other two as well. Now this is just a short time horizon, but U100 and NDQ both made more money than the S&P 500, but the Sharpe ratios were worse. The ups and downs of U100 are just going to be a little more gut-wrenching than the plain old S&P 500.